We note that Dow Jones and Nasdaq seems to have hit a ceiling in the past week, while the S&P 500, which also has a broader base as an index, seems to continue to be on the rise. In the current report, we aim to shed light on the fundamentals for US equity markets as a whole, but also particular issues for specific high-profile companies or sectors, and for a rounder view, end the report with a technical analysis of the S&P 500. The release of the US CPI rates for February may have taken the markets by surprise, as the headline rate unexpectedly ticked up while the core rate slowed down less than expected, both on a year-on-year level. We note that US stock markets shook off the effect of the release and were able to end the day in the greens. The importance of the market reaction also lies on the fact that it highlights the optimism of market participants, which could provide additional support for US equities. Next possible test for US stock markets could be the release of the US PPI rates and retail sales growth rates, both for February on Thursday. Next week, we highlight the release of the Fed's interest rate decision as the main event for US stock markets on a fundamental level. With the turbulence about quality issues in Boeing, the company's share price dived around 10% over the past 3 days, reaching as low as $183 per share. Investors' confidence towards the outlook of the company seems to have been shaken considerably. In a newer instance of Boeing 777-200 lost one of its tires during a takeoff from San Francisco on Thursday, while flights reported technical issues on Monday. Despite the company promising changes after getting a government audit that revealed substantial weaknesses in production quality, the reversal of the negative outlook of the company may prove to be difficult in the coming months. Overall, the tendency for the time being is for the Airbus to get support, while on the flip side, Boeing's share price sinks. We highlight the news today that EU lawmakers in the European Parliament today approved the AI Act, rules aimed at regulating AI systems according to a risk-based approach, as Euronews has reported. The restrictions are expected to come into force by May this year and are definitely bad news for AI-driven companies, including tech giants such as Microsoft, Alphabet, Amazon, Meta, and Apple. We would especially highlight Microsoft, given its recent expansion in Europe through the partnership with the French startup Mistral AI. We remind our readers that in the last equity report for February, we had highlighted the intentions of the EU to examine the partnership. Overall, the new act is setting limitations on AI in Europe and is expected to be the precursor for similar legislation to follow in other countries, and thus could weigh on the share prices of companies like the ones aforementioned. S&P 500 continued to rise since our last report, placing some distance between the index's price action and the 5,100 support line, which, by the way, provided support for the price action. We tend to maintain our bullish outlook as the upward trend line guiding the index since late October last year remains intact and continues to support the upwards movement. At the same time, we note that the RSI indicator remains just below the reading of 70, implying that the bullish sentiment in the market for the index remains present. On the other hand, the price action is flirting with the upper Bollinger Band, which in turn may slow down the bulls somewhat. Should buyers maintain control over the index, we set the next target for the bulls at the 5,250 resistance line, while even higher we note the 5,400 resistance line. On the flip side, should the bears find the chance and take over, we may see the index dropping, breaking the pre-mentioned upwards trend line in a first signal that the upwards movement has been interrupted, breaking the 5,100 support line, and the next possible target for the bears, should the S1 be broken, could be the 4,975 support base. As this report concludes, we would like to thank you for being part of our financial updates. From all of us here at IronFX, we wish you a solid trading.